Hello, how's it going, everyone? Long time no see. Not that I haven't been trading, I have been, but we were range bound for a little while, and then we started breaking out of the balance that we were in, right? So there were different market conditions, ones that I didn't really prefer to trade. So I went a little while without trading, and then I did take a few days where I would take a trade, but it wouldn't be at like a solid level. Hence why I didn't post many daily plans. I didn't want someone who's less informed, who's not going to look at the tape or anything, take any trades off that. But I'm still active on the Discord, still posting my trades and whatnot there. But today I posted a daily plan, right? And I did take a trade, so we'll take a look at it. But let's talk about the makings of the daily plan and how I create these daily plans each and every day. So as always, I start with a TPO chart. I'll take a quick pause right here and I'm going to pull it up. Alrighty. So this is a TPO chart. If you're unfamiliar, TPO stands for time price opportunity. You'll also hear them called market profile charts. I understand they look confusing to those, again, who are new to this, but they're really not. They're simple to learn, and it doesn't take long at all to learn it. And once you do know what you're looking at, you take a quick glance at it, and you take the information that you need. So what information do we need, or what information do we get from this, rather? This makes the current market auction a lot more palatable. So we look at, are we leaving structure behind while we're trading? Are we in price discovery? Are we creating balance, trading out of it, retesting it? I think I said leaving structure behind, right? So some of the things we look at is, one second, points of control, right? We look at where they are. Same thing with value area highs, value area lows. Where they are they overlapping? Things like single prints, which we had right here, the overall shapes of the profiles, the lows of the profiles, the highs of the profiles, where they are, what they are, gives us context of what's going on in the auction, right? It's much easier than using something else and much more reliable. And that's why many traders use them. So from there, I go to this first chart that we were looking at. Now, again, if you're a longer term subscriber or follow me on any social media, these are footprint charts. Footprint charts are super customizable. Go to the home of the YouTube channel. I've pinned an introduction to these charts. They're super simple, although they might not look like it when you're new. And what we're looking at, what are these numbers? Essentially, this is the transacted volume. Between this price range over here, there was 19,200 contracts sold and 22,200 bought. So I go into the 4-hour chart. I look at, do we have an offer somewhere? Do we have trapped buyers, trapped sellers? Do we have high volume areas, low volume areas, right? We look at all these different things. We look for exhaustion at lows, maybe not having exhaustion at highs. And right, each of these things mean different things, and especially where they are in context of the market conditions right now, right? We look at the TPO and then we gather more information from our 4-hour chart and then put that on top of what we already know. From there, my third and final step of my daily plans goes to my daily. So I'm looking at the same exact thing as I would on this 4-hour footprint chart, but now that we're looking at larger time frame to participants, where we could see much larger offers, bids, trapped big positions that we know, if we have an offer that's trapped, we're going to squeeze. If we have a bid that's trapped, we're obviously going to dump, simply put. So every morning when I'm creating these daily plans, I annotate my TPO chart, my 4-hour chart, and my daily. You can faintly see right there, and I post in the Discord for those wanting to learn this type of approach and really how each of these levels are made, what goes behind them. Some people learn better with like the annotations and seeing it for themselves, and then after that, after I post those, I'll create like a 3-5 minute video of me going over the levels, going over the current market conditions, and pretty much sum up what I'm expecting and what I'm looking forward in the trading session, right? Just short video where I can answer questions as well. So I want to go into my actual executions for the day, right? This was my one sell zone for today. This is my one zone. Usually I have, 2 4 zones, 2 sell zones, 2 buy zones. But again, this is kind of different conditions, so you have to just trade that differently. Now, I didn't trade out my zone. We actually didn't even auction up to the zone, at least not yet, maybe. I front ran it. So we'll talk about that in a little bit. Let me pause, bring up my execution chart and my depth of market. All right, so we have the whole session in frame. This is a 1 minute chart, of course. And I just want to explain simply what the thought process was of this trade. Not so much of the level and why I was looking at this area already, but more so in real time, looking at this just at this session's context, right? There's always more to it, but this is a pretty simplified version that I think can help people. So session opens, and I think within the first half an hour, we traded less than 10 points or maybe just around 10 points. So not much going on, right? So when we have tight consolidation as we had, what happens? Well, you're going to have bulls position themselves here, right? They want to, they see consolidation, they want to enter towards the lows, try to sell towards the highs of consolidation. And here you'll have sellers try to do the same. So obviously sellers are going to be stopped out here. Same thing again, right? Sellers start positioning themselves, come fill these volumes, come back up, same thing, stop out. So I was already had my eyes open to 89s, but as you can see, we traded into it and stalled a little bit, right? A seller showed their hand. What do I mean by that? Well, when we look at the DOM, I go over how to read this. I have a whole bunch of tape replays and etc. How to read the DOM, but you could see a seller come in. You know, they start showing their hand. So I just waited a bit, right? Didn't want to be too quick on it, especially since this wasn't really a level that I really liked. I did trade this third size because of that, but I was planning on trading that sell zone third size regardless, just because it was a very cautious sell zone. So, right, so they show their hand, but I stay patient, a little bit of a stop run, come back, and then once we come back into this 89s, 90s, even up to 92s really, where the ceiling was really put in. But over here, we saw a reoffer. Again, that's seen on the DOM, but imagine this. You have sellers, someone with big hands starting to show their hand, pop out, maybe take out some day traders trying to take right on their coattails, come back into here, and then what happens in here? Less experienced traders from over here are going to FOMO in, chasing the lows, and you know that just provides more liquidity for that bigger hand, right? That's why we see this type of stuff, because this bigger hand that initiates here is then stopping to absorb and whatnot here, so that the book is lighter. This runs price, right? Let the bulls get their advantage, stop out these sellers, and who is selling these shorts covers, right? This big hand. So, right, you and I operate over a tick or two. Bigger hands, they could afford these few points drawdown, no problem. So we come down here. Hopefully this all makes sense. I'm not trying to be too confusing. But we come down here, right? Low slamming shorts come in, popped them out. And then on this reoffer in this area is obviously where I shorted. I was pretty early because I did want to get size on. So I got my full position, which was third of my actual position again, risking 3 points. So I was in at 89 halves, 92 halves was my stop. And then I took half off at 2R, or 6 points. I think it was another half off at the point of control for the session, and then all out into value area low of the session. So pretty structural day, right? And you could see, I actually marked it out here. I didn't even have this order set yet, but you saw on the DOM floor was being at least temporarily put in. DOM isn't something I've always used, or the depth of market. I used to really rely mostly on smaller time frame footprints, which I still do use. I use the higher time frames every single day throughout the day, but for actual execution, one can use a 5 minute. I've used it successfully for a long time, but I've come to really like the depth of market, and so have the people in the Discord agree with me. They thought the videos helped a lot, and it just makes this, it takes some subjectivity out that we might have in footprint. Yeah, whatever. Hope you guys all had a green day. Again, I'm not just ignoring the YouTube, but this is kind of a slower time period. Once we start having levels every day and I start trading every day, I'll start uploading close to every day again. But if you guys ever have any questions, comments, or email me. I always leave my email in the description. And if you're interested in learning this approach, go on my website. You can find me there. Hope you guys have a great day.